Hey gang, welcome to Money Talks. I'm Bill Barheit, founder and CEO at Abra. I'm super excited for today's episode. Scott Melker, the wolf of all streets, will join us in just a bit. I've got the Abra team here all teed up for your AAA, Ask Abra Anything. First, we're going to get into some charts and some crazy Fed confusion. But all right, let's do this. All right, gang. Thanks for joining today. So crazy week. You know, it was hard to tell if markets have bottomed, if we're in for more pain, or if it's just sideways from here. In a few minutes, Scott Melker is a fantastic technical trader, is going to join us and give us his perspective on what's going on. Let me give you a little bit of perspective on what I've been seeing over the past few days, just to kind of tee this up and give us all a little bit of context. I'm going to share a couple of charts with you here, if I can find this. Here we go. So here is. I'm going to start off with the CPI, right? So everybody's talking about inflation year over year. Obviously, this looks bad. Now, the question becomes, why is this happening, right? You can kind of see like a rough mean here on inflation, which says, core CPI in the United States should barely be budging, and yet, here we are up here. So, if you listen, for example, to the All In podcast, it's basically 2001, the sky is falling, hunker down. And, that's probably prudent if you're an entrepreneur running a company. And I know we have some fellow entrepreneurs in the audience, and I get all that. But the question becomes, is that really what's happening? So let's look, for example, at the 10-year. This is the 10-year Treasury. It's basically for the first time since the 70s broken above this channel, right? Which is kind of been that channel of truth for interest rates. And you can see it's kind of going sideways now. It doesn't seem to be on a huge upswing as it was the last few months. And then the last thing I'm going to show you is really the leading indicator here for where the economy is really at, and that is the ISM. Now, the Fed is telling us, and Goldman is telling us, that we're probably going to avoid a recession, which I find astounding, since I actually think, based upon these leading indicators, that we're already in a recession. So how can the Fed basically say one thing and Bill basically tell you exactly the opposite? Well, my take is really simple. The Fed has become what I would call a trailing indicator for the economy. And how can the Federal Reserve, who tells us where it's at, basically become a trailing indicator for the economy? Well, as they describe it, and if you listen to Powell's and the other Fed members' comments this week, they're basically continuing to look at inflation numbers into the past and not trying to get a sense of where it's going in the future, or look at actuals that actually represent leading indicators like the ISM. So historically, if I look at this ISM, which basically tells us, if you're not clear what the ISM is, it basically tells us for large manufacturers who need to purchase goods to provide their own goods, are they buying? Is that buying accelerating or slowing down? What this tells us right here, this falling ISM value, basically tells us that manufacturing is slowing down dramatically in the United States, okay? And a number down here in the 50s, which is where this is clearly headed, means we're in a recession, okay? And if you look back to 2008, it got into the 30s. And I actually think that the mode we're in right now actually looks like the early 70s. So if I go back to 74, the ISM plummeted to 30, but look what happened afterwards. And this is really important. It spiked. Why did it spike? Because the sentiment from the Fed was exactly what it is now. As a trailing indicator, we're all about inflation. We're all about inflation. All of a sudden, deep recession, they did a 180 and they started lowering rates. So let's go back to where we are today in June of 2022. If we get the same sharp fall off in the ISM that I think we got in 74, which is what I think is going to happen, I think the Fed has no choice but to reverse course. If they do that, it's game on. Meaning, I think risk on assets will basically spike, just like they have done in previous recoveries. Okay, I have a whole bunch of other charts, data. I can tweet other, better macroeconomists than I am, who've made their case on even opposite perspective on this. But I think history will prove that I'm right here. Anyway, we'll see. I have no crystal ball. I'm just basically going by what I've learned by doing this for a few decades, and clearly the Fed is overshooting the mark yet again, meaning that they're just a natural trailing indicator for this economy. All right. So as I said, I wouldn't be surprised if there's more short-term pain to come, right? As this ISM plummets towards 30. But on a relative basis, once the Fed has no choice and reverses course, risk on assets like crypto are simply going to explode up and to the right. Based on everything I've seen historically, the QQQ, the tech stocks, crypto, and everything that kind of falls in that bucket, it's going to be game on again. All right, so we'll get into this with Scott. I wanted to just give you a quick kind of perspective on why I think a lot of folks have it wrong here and think we're in for a multi-year kind of 2001 style recession. I don't think that's the case. I think this is going to be painful. I think it's going to be quick. And I think the Fed is going to reverse course and we're going to come out of it the other side. I could be wrong. We could be in for years of pain. I just don't see it. All right. So all of that aside, we're going to have Scott Melker join us in a couple of minutes. By the way, Natalie is normally here, our weekly Bitcoin analyst. She's not feeling well, and so we wish her a speedy recovery, but we told her to get some rest, and we'll see her next week in Austin for Consensus, which we've also got to talk about in a few minutes. Okay, but first, getting crypto is not always easy. At Abra, we've added several easy ways to add money to your account to best suit your needs. Take a look at the different options.
Funding your Abra account is easy. Just open the app, then tap Add Money. To buy with your Visa or MasterCard, tap the app. Click Bitcoin through Simplex. Open in your web browser. Enter the amount, then paste your Abra wallet address and tap Continue. To transfer money from your bank account, tap on ACH Transfer, add a new bank account, Continue. Then select your bank. Enter your username and password. Confirm your identity with a code. Select account, enter an amount, and confirm. For a wire transfer, tap Bank Wire Transfer. Then tap Wire Instructions. Log on to your bank's online banking page, then initiate a wire transfer. Follow the instructions on the Abra app to input your account, then send your wire. Transferring crypto is simple. Tap Deposit Cryptocurrency, then select the coin you're transferring. The Abra app gives you the receive address to send your funds to. Funding is easy with Abra.
All right, welcome back. So last point I want to make here on this macro situation is everybody's asking, what is driving this inflation? Is it really the money printing that's driving the inflation? Because, what that tells us is if the Fed tapers, right, and reverses course like I'm predicting, won't inflation just skyrocket again? And I actually don't think that's the case. I think that the inflation that we're seeing right now is not actually caused by money printing directly. I think it's actually being caused mostly by supply chain disruptions. Because if you look at where most of the money being injected into the system is going, it's basically going to the wealthy, which is moving it into what was moving it into risk on assets. And we've just experienced probably the steepest tightening in modern macro history. So it doesn't really add up that it's simply a function of money printing that's causing these disruptions. I mean, if you're paying attention to supply chains in China, for example, you could basically walk across the South China Sea without getting your feet wet, just given all the ships that are lined up there, given the supply chain issues that they're having. And so skeptical that it's just the easy explanation is just money printing. It's become kind of a catch-all phrase for Fed loose policy. We'll see. Anyway, all right. So he's been waiting long enough. Let's welcome back actually welcoming for the first time Scott Melker to Money Talks. Scott is a very well-known crypto investor, trader, host of the wildly popular podcast, The Wolf of All Streets. I've been on a couple of times, love watching it. Hey, Scott, thanks for coming on Money Talks.
Thanks so much for having me, man. I'm glad we were able to make this happen. It's nice to be on the other side. I think I've done this probably 5 or 6 times with you at least from your side of the mic.
Absolutely. I love your show, and I watch it almost, certainly every week and almost every day. So we appreciate you and what you do there. And I guess my question for you is what do you think? My first question is, what do you think matters more here? Is this like deep bad fundamentals, or is there like a technical trade here to even be had, or is it just go to cash and just wait it out? Now I'm talking about as a technical trader, not as just a buy and hold guy.
Yeah, I think that this is, and consensus across the board would be that this has been one of the most difficult markets to try to trade in decades, right? And I'm hearing that from hedge fund guys, private equity, like all my guys who are like deep day traders and stuff. Everybody just can't figure it out. And that's talking even more about macro markets, which I think is compounded when you step into crypto, because we're 24/7, 365. Right. And you sort of have these brief times where you have to be concerned with macro, and then these other times where it seems to be sort of trading in a vacuum and you can just check the chart and do whatever you want. I mean, my approach at this point is dollar cost average, buy dips and wait, and completely approach this market as an investor and absolutely avoid getting chopped up and losing my money before it inevitably, as you said, returns up and to the right. I love everything that you said in your analysis, and I think my conclusions are all the same with completely different data and approach, which I love to see, because it's a confluence with metrics that I've never looked at, charts I haven't really looked at, and a way of thinking through it. I mean, if you're trading Bitcoin right now, more power to you if you're able to make sense of this chop. Maybe you're a short-term range trader, which makes a lot of sense here. But otherwise, I feel like this is just a trap for leverage, right? Liquidate you up, liquidate you down, sort of the Bart Simpson, inverse Bart Simpson patterns back and forth that we've been seeing. Yep. Yeah, I think it's a nightmare. And when Bitcoin's a nightmare, it makes altcoins an even greater nightmare, right? So I think it's just highly avoidable right now if you don't have a long perspective. For
sure. Do you actually take directional bets in your technical trading? Meaning, will you short Bitcoin or Ethereum?
Not anymore. So I did pretty aggressively before I would say I was fully orange pilled. It's just, I admittedly would say that I care about the asset too much to be able, I think, to short it. Not that I couldn't, I just don't want to be short, right? Because I'm a long-term believer and I really do think it's going to go up. In general, I have not had nearly as much success shorting markets in general in my career, just because to be short, you have to not only be right, but you have to be right at the exact right time. And your upside is limited. Being, as they love to call us, bulltards, and just taking a larger time frame, you're eventually going to be right if you're not getting stopped out with leverage. Yeah. Right. So it's just a much easier trade to be long with exponential upside and fixed downside, fixed upside if you're shorting. Right.
Yeah.
So I short stocks. I'll short stocks.
Okay. So that was my next question. So for the average listener here, who's probably more of an investor than a technical trader, how should they think about the value of technical analysis and where it should fit in kind of the overall toolbox for an investor?
It shouldn't at all. I would say there's no point in learning it. It's completely avoidable, like the market. And unless you plan on becoming a trader, which means plan on losing your money 3 or 4 times completely before you actually become competent, then you should just be an investor. I say this all the time. People who have accumulated generational wealth in markets historically, I would venture to say that 99 to 99.5% of them have never looked at a chart or even heard of technical analysis, right? I would say that people who have a well-paying job and have invested over a lifetime and managed to accumulate a fortune have largely just let inflation in the market do the work for them, right? Invest as much as you can. Everyone says as much as you can afford to lose. I would say as much as you can afford not to touch for a while, because There's times when you can't afford to lose anything, of course. And I think that's just honest, and don't touch it. Put it somewhere, don't touch it, and ride it for a very, very long time. That's how wealth is accumulated, not through trading. I mean, trading is a hard way to live. It's sort of like being a poker player that grinds it out at the table. Eventually it's probably going to get you, and you're going to have that one wipeout. So to me, this market right now is a dream for accumulators for the long term. I mean, I think that you're getting everything at a 60% discount. Who doesn't like that?
Right. I mean, I guess one way to look at it is historically going back to 71, holding cash is a natural short versus assets that genuinely appreciate, right? And so taking a short position in one of those assets is actually a levered position versus the natural short, which is holding cash, right?
Absolutely right. But interestingly, I think it was Tom Dunleavy from Masari tweeted something this morning that I retweeted. And it was basically said, this is the first time since the 1980s where every investment you could have possibly had went down, and your cash that you could have been sitting in lost value because of inflation. Right. So it's the most losing possible market that we've seen in basically 30 years.
Right.
There's nothing you could have done to basically hedge against any of it.
Right. And it looks like, with the exception maybe of Miami Beach, real estate's falling. So unless your real estate investment horizon is 6 months, which by definition it's not, because you can't even buy and sell a house in 6 months, everything is losing value right now.
Yeah. And
so it's really just a global reset.
I agree. And what's really funny, just to go back to your previous question about technical analysis, another thing that I like to joke is that so if you're an investor and you really have a long-term investment horizon, but then you decide you're going to trade or you're going to focus on charts every single day, imagine if you watched the value of your house on a chart on a day-to-day basis, how insane that would drive you, and how likely that would be to disrupt your thesis at some point that you bought your house to live in for 20 or 30 years and were concerned about the value. It's kind of the same thing, right? If you're buying Bitcoin and worrying about it for 20 to 30 years, but then you're also obsessing over the hourly chart on a daily basis, you're probably doing yourself a disservice.
Yeah, in a market that doesn't close versus equities where the markets are closed more than they're open.
Yeah.
And so I've tried it, and it's not fun, and it's not really feasible at any kind of long-term duration, right? It's not. It's the most stressful thing I've ever done in my life. And so I would not recommend it for anyone. I'm with you there. Unless you've got some automated system and then you're interrupt driven, but even then your chances of beating Bitcoin and Ethereum long-term, in my opinion, are ultra low. I don't know anybody's done it.
Yeah, I agree.
Okay. So I love your newsletter. That having been said, because I think it's information is information, whether you're technical trading or not. I have to ask you one question. I noticed that at the bottom of your newsletter today. Did you read Arthur Hayes' most recent Medium post?
I did.
So
heavy read.
Arthur is amazing. It's as a CEO well, he's not a CEO anymore. For those of you who don't know who Arthur is, he is the founder and was the CEO of BitMEX, which is now called 100X, which I guess is a reference to their ability to do 100X leverage on their perpetual futures. But basically, he wrote this amazing post this week. Actually, his last 3 posts have been truly astounding. He must have a lot of free time right now, because the quality of his writing, and I say that half jokingly, which I shouldn't, because I think he's going to go to prison for some stuff that transpired in the early days of BitMEX. But basically, the writing is astounding, and he's making the point very similar to what I was saying earlier, but way more eloquently, that we're about to get into game on mode, where the Fed is going to have no choice but to sharply reverse course. And he basically predicts that this kind of yield curve control mode that the Fed is about to get is going to put us on a march towards $1 million Bitcoin, which, to be clear, is it's not 1,000x from where we are. It's 30x, right? And so, what was your take on that last article?
I would say that also he arrived at the same conclusions as me by utilizing different analysis of data. So I really enjoyed it and loved it. I mean, he was even enough to say that he thought the $10,000 Ethereum was still possible by the end of this year. But listen, my thoughts on what you said before and what he had to say in the article is very clear, right? And we have a lot of actually historical precedents for this. It's hard not to get caught up in sort of the bearish euphoria and the emotion surrounding what's happening. But if you actually look at data, there have been, it's either 12 or 13 now, I don't have the chart in front of me, tightening cycles since the 1950s, right? And all but one, which is the early 70s, which is the one you drew a bit of a corollary to, but all but one have ended with outstanding performance from the stock market. If you zoom out a year to 2 years, right? So what basically happens is you have the initial shock of the tightening cycle, which we're having, I would say, right now, and then markets absorb it and it becomes the new norm. And then you start doing the dog and pony show of comparing what the Fed says to what they actually do, which is all that matters, right? It doesn't matter how much they raise. It matters how much they raise versus how much you expect them to raise, right? And so you just call your cronies at Goldman and say, you guys say 0.75, so we can do 0.5 and it'll look great, right? And so it's my feeling that we're in the throes of that early stage of it. And then by the end of the summer, we probably come out of it and start to outperform. Now, you can also take that. There's been a number of those tightening cycles have happened in midterm election years or election years, which is what we obviously have now. And the market has never performed badly in that situation. What happens is for the first 3 quarters of the year, you have exactly what we're having now. So I kind of am anticipating maybe a rough or boring summer. I'm not going to say we're going to put in new lows or anything, but I wouldn't be surprised if we're at 26 for a while, up to 38 for a while, and sort of chopping everyone up. But then it becomes election season, and politicians don't want to lose their jobs. It's literally the only thing they care about in the world. They certainly don't care about us or our priorities. So none of them are getting reelected if we're in a recession, depression, or even probably a sustained bear market.
Yeah.
So the gas is going to be back on for the Fed. Listen, none of us believe the inflation numbers, right?
Right.
We know that they're cooked. Like even in January, they're like, we're going to sort of add this calculation to CPI, exclude this thing, include this thing. So all that matters is if we see it going down. So we had 8.5. Now we have like an 8.2 print. Let's say we get a 7.9 print and a 7.7 print over the summer or something. Like you said, that'll be all it takes for them to probably put their foot back on the gas. Also, I mean, I feel like the market is pricing in somewhat of a worst case scenario already. Like 0.5 rate hikes every time from here into perpetuity seems to be what everyone's looking at with quantitative tightening. So I just think that we're in the bearish euphoria phase, lots of panic. I already hear the chatter of nothing can go up. Right. It's not only like we're in a bear market, it's like there's no scenario that's going to get us out of it. And when you start to hear that.
Yeah, the VCs are clearly in 2001 mode. Meaning the sky's falling, it's protracted. You know, basically in 2001, it was 4 to 5 years really before you really felt like that was the past. And I just don't see it this time. I feel like, look, the Treasury returns to date for this year are the worst in 240 years, basically since like 1780s. And so I that's not sustainable, right? The
Dow Jones just printed 8 red weeks in a row for the first time since 1923.
Yeah.
I think that's when people start talking about the bear market that we're going into. Like you said, we're going to go into a recession. Where the hell have you guys been?
Right.
Like we're in it. Yeah,
exactly. We're in it. And you all are the trailing indicator, which is telling us what we already know. And so I guess the second question is, you know, is there a line in the sand for you? Like, do you say, okay, I don't see how we go below Bitcoin at X. Do you see that?
I don't have a line in the sand. I mean, I think that anything below 20 would surprise me. You know, if not for more than like an hour, you know, we get one of those massive sort of wicks and bounces.
Right.
I think there's so many people that view that we have to go to 20 because it was the 2017 high that was sort of never retested as support. But again, a chart is just a bunch of lines that are representing what human beings are likely to do. So I think that would get massively front run. I think the bottom's in, right? And I'm putting my money where my mouth is, but I really don't care if it's not. That's the difference, because it's not like I'm over leveraged and if we go lower, I'm in trouble. I'm not. I'll be totally fine. But I mean, I bought, 33, 32, 30, 28, 26, just kind of filled all those laddered bids.
Yeah.
But to Arthur's point, and something that I've been saying as well, I mean, we just absorbed 80,000 Bitcoin being sold basically in one fell swoop by LFG. And the market bounced right basically back to 30,000. There was no contagion from what happened with Luna. The free market continued being free, continued operating, keep mining blocks. Nothing's broken at all. And we're right back to the same price. So if the forced selling of 80,000 Bitcoin into this market didn't sizably make a difference and change the price dramatically, I don't see anyone else coming in and dropping 80,000 more Bitcoin on the market anytime soon. So I think that the bottom is probably in or close. And I think people get very caught up in finding the exact bottom price without realizing that the bottom can be a multi-month event that is like, look at last summer. I mean, May to September was an absolute nightmare. There was no volatility, no volume. We basically went from all the way down to the 30s and down to 28 and mid 30s. And we just did that for months and months and months. That's sort of what I'm thinking will likely happen because of the macro environment before we get into election season.
Yeah, I think a couple of things ring true for me. One, the amount of Bitcoin on exchanges on a relative basis, meaning relative to the overall float, has never been lower. Which means that effectively strong hands are holding. They're either putting in cold storage or they're moving crypto to places like Abra to earn yield. Our absolute numbers in terms of Bitcoin are going up while the exchanges are going down. And I know a couple of our competitors are in the same boat, minus the ones that are having legal problems. And it's for obvious reasons, right? They're not trading. And so, this to me is super, super bullish. And, so to your point, I don't think it really matters whether we're going up 10x from 30K or 25K. But I think the next run is basically, 10x. And so that's what the exponential growth models are telling me. And so I'm not making that up. Basically, the current models would have to break, because if you actually look at one of my favorite charts is Raoul Pal has this basically log chart of Bitcoin that shows the median price, and we're basically at 2 standard deviations below the median, which has only happened one other time. Now, for us to stay at 2 standard deviations below the median over the next year, the price has to get back to 80K. Okay, but to us to get to the median, Bitcoin has to go to like 3 to 400K, if I remember correctly, over the next year. So the question becomes, does that 10-year chart, which has been holding, break, right? Or does it revert to becoming the normal again? And I kind of, I've obviously, like you, put my money where my mouth is, but I think it's the latter. I think it reverts to being the normal again. And you're basically going to see the network effects take off. So I don't know. Yeah. How you feel about that?
Yeah, mean reversion goes in both directions, right? And what we're seeing right now, largely in the stock market and even here, is to some degree a mean reversion, right? I mean, valuations in the stock market were obviously massively overblown. Things were trading. You choose your line depending on your sort of your bias for technical analysis, but say 200 MA or 100 MA, whatever it was, everything was flying way above all of these lines that people would view as signals of mean reversion. And now they're right back, right, to sort of fair valuations. It's funny. I mean, you were talking about sort of 2001 and obviously the tech bubble pop and them saying maybe we're going into a recession. I mean, the tech bubble has popped again. When you see Netflix and Snapchat and Facebook dropping 30% in an hour, after hours, when in a market where people can't even react or sell their stock or do anything, like that's already happened, right? Yeah. I don't think Facebook, I don't like Facebook, but I don't think it's going down another 70%. No. I don't think those things are happening. I've bought a lot of this wrecked stuff. I haven't bought ARK, like Kathy Wood, like everyone thinks she's going to be homeless. I think that's probably a good time to buy.
Right. My kids hold, all those things that you just mentioned, and they haven't been selling. They dollar cost average including into Bitcoin, and they understand why. We've had long conversations about it. So I guess, the big difference for me between 2001 and now is that in 2001, the slowdown was very much seen in discounted cash flows in these equities that were basically generating much, much lower, smaller profits. We're not seeing that. right? If you look at the quarterlies from all these companies, yeah, a lot of them are basically trying to set expectations about upcoming quarters, but the current quarter prints are phenomenal, right? And so, we're not seeing any of that corporate slowdown from 2001. It's credit driven. This is the fastest tightening cycle we've ever seen, certainly in my lifetime, but I think in modern recorded history, period. And that has nothing to do with the broader kind of technology stocks that are actually bearing the brunt of this. If anything, it's going to be more of a manufactured driven slowdown where the cost of credit there will have a much bigger impact. And so I think people have it wrong on several levels.
Yeah, the Fed's just late, like you said. I mean, they're a trailing indicator. No question that even if they had to do a tightening cycle, that should have been a year ago, right?
Right.
They're just too late. It's just too late, and so the inevitable conclusion is back to the norm when people forget about inflation and the narrative changes.
Yep. Did you see this New York news on the Senate, the state Senate banning Bitcoin mining, or basically banning? No, they didn't ban Bitcoin mining. I think what they banned is using carbon energy to power mining rigs, if I understood that correctly. How that's even enforceable, I don't understand. But
it's a 2-year moratorium on proof of work with anything that's not 100% renewable. Yeah, have fun.
The 2 years sounds like exactly the amount of time it would take for any other court to basically laugh them out and say, this is a joke and it's unconstitutional. And how are you differentiating between what this web hosting service is doing and this web hosting? It's just so laughable. It's insane.
But it's par for the course for New York State, right? I mean, they've been notoriously the most difficult to navigate, I think, for anyone in crypto at any level, actually, like from exchange all the way down to average person who just wants to trade or earn yield.
Yeah.
And it's nonsense. I think it was last summer or 2 summers ago. There was that article that Greenidge, I think is the name of the miner, which happens on Seneca Lake, which happens to be next door to my best friend's lake house there that I would go every year, that they were boiling the lake, right? And by the way, there's a lake that they have a submarine base in the middle of it where they used to train. It's so deep and so large, and this lake is frigid. So right after that article went out, I happened to be there a week later, and I was like, I was swimming literally outside the miner where like the tubes are coming out. I was like, it's freezing in this lake. I don't know. But that's the level. I really think that they believe those things in New York.
Sure, they do.
That we're boiling the oceans and the lakes, and that the miners are destroying the planet. And really, I mean, the reality is that it's primarily renewables that they're using anyways. And we all know they're helping secure the grid. It's actually a benefit largely. They're just missing the boat here. I mean, New York, they hate fun. They love self-inflicted wounds.
So I grew up. I'm from the Bronx. Grew up in mostly in New Jersey, and
I'm a New York guy too.
Okay, there's a T-shirt that you can get at the airport, and when you land at Newark, it says "Welcome to New Jersey. Now go home." And I feel like that's New York's policy right now: is please take your business, pack it up, and just go somewhere else, and you'll be fine. And we won't, but that's our problem.
And it's interesting. There's such that strange sort of bipolarity of the state and the city, right? I'm not saying that they're not aligned in a lot of ways, but I mean, you have Eric Adams, the mayor, coming out. Obviously, he's just trying to ride the PR coattails of Suarez, but saying, I'm going to take my paychecks in Bitcoin, Ethereum. We're going to compete with Miami to be the crypto capital of the world. And meanwhile, like nobody in the city can even get access to 99% of the assets he's talking about.
That's right.
It's complete nonsense. The left hand's not talking to the right hand there, but it's very clear that New York State is just, I mean, they're going to like crush innovation and everything's going to leave. I mean, we've seen the last 3 years, California and New York, everyone's moving to Florida and Texas, for better or for worse.
Yeah. All right. So what's your prediction? So where it's, what is it? I'm looking at the date. It's June 3rd. So what's your prediction? 90 days, 6 months, a year? Like where are we? Why? And, how do you think about it?
Okay, so first I will say that I hate making predictions, but I will for you. But there's nothing that makes you look dumber than a prediction about price in the future when you don't have the ability to obviously travel there and see. But my general thesis is sort of what I presented before, which is that I think we see a long, choppy summer. I mean, summers are historically slow in markets anyways, and entering the summer sort of with this bearish vibe and the market as it currently is, I just think it's going to be a long and choppy summer, and that we're going to see a renewed bull run, maybe October again, right? People also forget, you talk about, are we going into a recession? Are we going into a crypto winter is my favorite. We've had one good month in a year, guys. Like last October and maybe into the beginning of November was tremendous. We had this huge run and everything went nuts, but every other basically period has been terrible since last April or May. I think we'll have sort of a repeat of that. And then as the fourth quarter starts and I think the printer comes back on and people get back at their desks, I think we'll see, I certainly think that we'll be revisiting the 50s and 60s by the end of the year. I would like to say 100, but I just don't want to get ahead of myself. But to me, it doesn't matter if that happens in December or next June, right? I think that it's inevitable that we're going to six figures. And like you said, I think 200 to 300 is a very, very reasonable target for sort of the next run. And I think that's in advance of the halving. And then I think we have the next halving. And that's when we start talking about, the next 4-year cycle hitting million.
Yep, I totally agree. And I think when you're dealing with kind of exponential runs, this stuff just doesn't really, it's noise is what I mean to say. A lot of it matters. That's why we're here talking about it. But because people are afraid. And I think, because we think linearly as people, we don't think exponentially. We have a hard time with log charts. It helps when you hear these explanations, but you kind of have to hear it over and over again. You have to live through multiple cycles to believe it, because all of us who've lived through, anybody who tells me that a little bit of fear isn't creeping in, even if you've lived through 5 times, is lying. And because there's always the question, is it different this time? Right now, of course, I don't think it is, because why would it be? Right. And so I see no good reason for it to be different, other than the exponential growth in the adoption of Bitcoin and Ethereum simply stops, full stop. I've seen no evidence of that, and have no reason to believe that it would.
I agree.
Yeah. Cool. Dude, I like I said, I love your newsletter. Where can people go to subscribe, and how can they best find and follow you online?
I would say just go to @Scott Melker, SCOTTMELKER on Twitter and everything. My YouTube, podcast, and of course my newsletter are all linked there. Bill, it's great. I'm so happy that your analysis comes to the same conclusions as mine. It makes me feel a lot better. Really quick to your last point about fear. Yep. We all say we don't feel it, but every time I buy something right now, I puke a little bit. And it's usually a good signal that things are getting worse. Even though I try not to and try not to react, as you said, there is that creeping suspicion that, oh my God, what if I'm lighting my money on fire, right? And that usually means the bottom is near.
Yep. Well, the good news is we're all smart people. We can work and make more of it. But yes, I do tend to, I would be lying if I said I didn't share the same issue on occasion, even though I sit here and talk about, exponential growth all day long for a living. So I get it. And those of you who kind of are in that boat of like, yes, I understand what you're saying, Bill, but I'm still scared. And what should I do? I said, well, usually my answer is invest a little less, make sure you've got 6 months of runway for yourself. And if you're not in a position to support your lifestyle with that 6 months, maybe more. And then, you should be in a position to have a 5 to 10 year view minimum on the kind of exponential growth investment, so that you can filter out the noise. And if you can do that, you'll be fine.
Couldn't agree more.
Cool, man. Well, let's see. I'm going to see you in Austin, right?
Next week. See you next week.
Yeah, exactly. So we'll share a drink then, and we'll see if the markets are sharing our opinion of things, or if there's newfound pain, or both. So
sounds great, man. Thank you. Looking forward to it.
Yeah. Thanks for joining us, Scott. Really a pleasure to have you here. All right. Scott Melker. He's awesome. You got to follow Scott on Twitter. He has great guests on, has a great perspective on things. Very rare that a technical trader will tell most people you shouldn't be doing technical trading, which is 100% true. Most people I know doing technical trading simply lose their money. All right. So speaking of not technical trading, why leave money on the table? If you're holding your crypto in a cold wallet, you could actually earn interest on it with Abra. Getting a lot of questions in the live chat here about how Abra Earn works, how we earn yield with Abra Earn. So here are some basics. Take a look, and then after that, we'll come back and answer all of your burning Abra questions. Okay, welcome back. Thanks again, Scott. That was fantastic. So I want to bring in from the Abra team, people you know, Deepak Ghosh, our VP of Product, and Tanner Nelson, our Head of Customer Support. And come on in, guys. Good to see you. Before we get into the AMA, and I'm seeing a lot of questions here, also a lot of positive feedback and audience participation on the comments and discussion with Scott. Just some ground rules that I like to remind everybody every week. We love the feedback, and we have some comments for you from last week's feedback as well, which we've been discussing internally. But look, if you love what we're doing, please tell us. If you have concerns about what we're doing and or questions, please tell us. But we're going to basically, what we enforce here is a civil and respectful discussion, and anything else, and we're going to boot you out. So with that having been said, good morning, guys.
Hey, Bill, how are you?
I'm good. Good. Did you guys enjoy Scott?
It was amazing.
Yeah, he's a good guy.
Good, yeah.
All right, so let's get into this. We have so many questions. I'm going to kind of start at the top and work my way down. I've been making some mental notes during the breaks here. So let's see. Where do we start? First of all, while I'm scanning, anything specific, Deepak and Tanner, you want to bring up, announce, mention while I'm teeing this up?
Yeah, I mean, I think the number one thing in folks' minds that at least I've seen is the Abra perks being scaled back a little bit. I'm sure we're going to get into it, but just wanted to note what we already noted in an email that starting the 1st of June, we've actually scaled back Abra perks a little bit, and we'll get into the reason why and all that good stuff in a bit. But yeah, just wanted to bring that to people's attention.
All right, well, let's tee that up. We'll talk about it first, since I'm getting a bunch of questions. Tanner, anything on your side you want to mention?
Yeah, just +1 for what Deepak said. We're getting a ton of questions, obviously, in the chat through customer support as well. So getting into that will be great for everyone.
All right, so let's roll back, Deepak. Let's get into that, because I do see a fair amount of questions here on that topic. Abra perks slash what we're doing with CPRX. So why don't you explain what changes we've made in the short term, and then we can have a little bit of a discussion about, kind of what we're doing for let's call it 2.0 here.
Yeah, absolutely. So in the short term, it's very simple. We've scaled back giving out rewards a bit in the short term again. And so what happens as a result is that you used to get trade, earn, and borrow rewards, and also referrals. And those rewards are going to, they've already stopped as of 1st of June. What we haven't stopped, though, is the 3% staking rewards that you get when you hold CPRX in Abra Earn. So those are really the two big things that we just announced, and the reason being that if you look at our competitive rewards programs and what Abra Perks has done so far in just a few months that it has been live, we've paid out. It's been tremendous success. I couldn't understate it. It's been a tremendous success. People have been earning a lot of CPRX, through their activities on Abra, and they've been HODLing it. And so we've done a lot in the first few months, and it came to a point where we needed to scale it back so that we can sustain it in the longer term. Scaling back is not fun. Totally get that. I'm in the same boat. But we got to a point where we needed to really take a hard look at, the utility. After all, CPRX is a utility token. We've had a bunch of plans in the past where, we wanted a bunch of different utilities coming online right alongside CPRX. But the task at hand was way too complicated, way too complex. And things happen. This is software engineering. It's not magic. Things happen. We came to a point where, instead of, we were not going to put out an inferior product out to you guys. We would rather do the right thing, build the right stuff. And that took us time, unfortunately, and we couldn't plan for it. And so we got to a point where, we had to scale that back a little bit, and we're working on the next version of Abra, which we can get into.
Sure. So let's do that. So let's kind of hypothesize, since we're not announcing anything specific today, but we've got a team now that's doing nothing but working on Abra Perks, not only supporting current users, which is where Tanner's team is fielding a ton of questions, but what's next? And so what do you have how would you kind of articulate the big vision for, where we want to go with Abra Perks first? And maybe I can add some color on how I've been thinking about CPRX as well.
Yeah, absolutely. I mean, Abra Perks, the vision was very simple. It's a rewards program, which is powered by a utility token, which is a crypto perks token. Very similar to, how airlines treat their miles and hotels treat their points. Very similar. It's just that our point is on the blockchain. The vision is very simple. We need to make we need to attach as much utility to the token as possible. Frankly, we haven't been able to do that just yet because there were a lot of engineering complexities we were dealing with. We learned quite a bit along the way. But for instance, when I say utility, what does that mean? For instance, we said we're going to do some very interesting things with advanced order types, including, limit orders. Very few of our competitors actually offer limit orders. And so when that happens, we're going to have a fractional fee attached to those trades. And when we do so, you're going to have the option to pay your fees in CPRX for deep discounts, bringing this almost close to zero. That's utility. You're now using CPRX to pay for your marginal fees over what you were already doing. So that's one example. We mentioned earlier in Money Talks that we're doing something very interesting in the DeFi and NFT space, and some very other, interesting things coming. I really want to get into it, but I couldn't because it's, we're very close. But yeah,
for sure. So I'll just drop one hint. So next week is Consensus Week in Austin. It's the kind of biggest crypto conference of the year. The biggest Bitcoin conference has now become this Miami event in the US. And then probably the biggest crypto event in the US is next week at Consensus. It's moving to Austin this year. I'm guessing it'll be 15,000 plus, and with some side events, it may even be bigger. Abra is, and I'll disclose what's been publicly listed on the Consensus website. If you go to the agenda on Friday, and we may have to move Money Talks, by the way, to Saturday, because I think we would want to make the show about the announcements. I will be on stage with the president of the card network for American Express, Mohammed Badi, who we've been working with. And I can't say more than that, except to say that's been announced. And so I can share that with you. And we do actually have more than one announcement that we're going to be making during that session. So, I've been in prep with the team for a while now on this, and I'm super excited about it. And one of the reasons I'm mentioning it now is that Abra Perks, CPRX, and the topic of rewards will be front and center in these announcements. So I know you guys don't want to say anything because you don't want to get reap anyone's wrath. So that's where the CEO can step in and say, okay, well, it's on the website. So I'm not going to tell you what it is, but clearly there's something happening, and the consensus folks have already put it out there. So, and a few folks in our audience here pointed it out. So yes, that is going to happen next Friday. Super excited about it. It's been a long time coming. Actually, this is going to be a bit of a roadshow for us, by the way. We're going to be doing talks at investor events before Consensus in Austin. From there, we're going to New York. If you ever watch CNBC, you probably know John Najarian, who talks about options trading. He and I are going to be doing a talk on the, what's that big aircraft carrier on the Hudson? We're doing actually an event there for some investors where he and I are going to be talking together about crypto. And then there's a couple of other events, Battlefin, I think one of them's called, for high net worth investors. And so we're doing a bit of a roadshow. So it's going to be an interesting couple of weeks for Abra. Anyway, so I'm talking too much. So let's get back to some other questions here. So one question came up about the legal aspects of Abra Earn versus what's been happening with some other companies in the space. So let me, as much as I hate talking, let me take that one because I think I'm probably the easiest one to address that. So Abra works very differently from our competitors in the space insofar that we actually aren't the company paying the yield into your Abra account. You actually, when you sign up for Abra Earn, you get an account with Prime Trust, which is a trust company. I believe their trust license is in the state of Nevada, but it's a U.S. trust, and they are allowed to pay interest into the account. And we do that through Prime Trust. Now, Abra's lending operation has an agreement with Prime Trust that allows us to generate the yield for you, but it is paid through Prime Trust. And we're the only company in the space that I know of that has figured this out. I don't know why, because it's not really rocket science. It's hard, by the way, from a legal perspective to get all those agreements in place, but we were not first to market because we actually took the time, and I was very involved in this in the early days. We did all the heavy lifting to put those agreements in place to be able to pay yield in a safe, compliant manner. And as I said, to my knowledge, we're the only company in the consumer crypto space that is doing it this way. And, I feel this is paying dividends for us now, pardon the pun. So hopefully that makes sense. There's a lot of content about this on the web and in other AMAs and videos we've done, and you can find more information, but hopefully that addresses it in a nutshell. So if you have any more questions on CPRX or what I just said, please ask in the live chat and we'll follow up. Crypto Sonic asks, what about Roth or traditional IRA options? Deepak, Tanner, I guess you guys get this question all the time. I think we've answered it here before, but go for it.
Yes, same answers before. It's a very interesting value prop for us. We've been hearing a lot from a lot of our customers who are interested in products, retirement account products. So we're looking at them. We're in fact in discussions with multiple different vendors. I can tell you that much. Again, it's a very competitively differentiated product. If you look at sort of who we are and our direct competitors, none of them have it. I'm sorry, that was my phone. We're looking at it, and we're talking about it, and we will make sure that whatever we come up with, whatever experience we come up with, as easy and seamless as the other experiences are within Abra. So that takes time. But the value prop is very clear. The demand, we see it, and we're very interested in it, and you'll hear from us very soon about it.
Cool. Tanner, do you get a lot of questions on the IRA topic?
Yeah, fair amount for sure. I would say the best place to find product information is here on Money Talks. In customer support, I mean, if you're asking about what the future plans are, things like that, get caught up on Money Talks. We don't know anything in customer support that you're not hearing about here. So, and if we do, we can't really talk about it. So just want to make sure that we're being transparent with folks. And I think that this is a great venue for us to do just that and provide you with much better context than what we're armed to provide you with on the front line as well.
100%. So two things that I just remember. One is, yes, you can obviously get live support in the app, which should be your first stop. and in the app, there's a support function, and you can click on the chat bubble, and you basically get real-time 24/7 chat-based support. There is a US 800 number now, right, that people can call?
Correct. Yeah, we're available Monday through Friday, excluding holidays, from 6 a.m. to 6 p.m. Pacific time. And the phone number is just 1-877-2-GO-ABRA.
Yep. Okay, great. One of the things that came up last week was how people can give us more interactive feedback on Abra perks, CPRX. So Deepak, I think your team set up actually an email address for people to send feedback, right? Now, I'm not talking about support. I'm specifically talking about Abra perks and CPRX.
Actually, I'm not sure if we have an email.
I know they did, and
Okay.
I have it here. Priya, who everybody here knows from prior Money Talks, set it up, and I don't know. We'll find the address and we'll post it in the.
Sure. Yeah. I'll get on that.
And so it's specifically for feedback on CPRX and how Abra perks works.
Oh, that was a survey. Right.
Yeah, there was also an email alias that was set up to
I see.
post feedback, and so anyway, we'll get it together, folks. It's
Okay, yeah. Mm-hmm. Yeah.
So all right. So while we're looking for that address, a couple of other things. Let's see. One question came up on the difference between the yield being paid on USDT, which is Tether, versus True USD and other stables, and why they're different rates. I can take that one. They're normally the same rate, so that was a very astute question. They're different rates right now because the demand has diverged, probably as a hangover from the Terra Luna situation, where there was way more demand for Tether, which temporarily at least is driving up the rates for Tether. And so if one thing you could always do is just transfer your True USD into Tether if you want to get the Tether rate, and if you don't want to do that, obviously you can just take the 7.5%. I actually have a little bit in all of them for different reasons, just because I was holding them for different reasons. But yeah, there's nothing magical about it other than supply and demand. And on the lending side, there's significantly more demand for Tether right now, so the rates have gone up commensurate with that. And they may come back down. There's no guarantee one way or the other, but that's the explanation. Let's see. Yeah, some positive comments on Amex. I will be presenting, somebody else asked here if I'm doing anything with Rick Edelman. He was on the show last week, got really good feedback on that. Rick and I are going to be doing another event together in Austin next week. So if you're in town and you want to come, I think you can just do a search for Rick Edelman, Bill Barrett online, and you'll find the details for the event. Please come and join us. It's going to be super interesting. Lock and Lock says, please come to Korea, which is an amazing country. Yeah, it was my last big trip before the lockdown was Korea and Japan, and looking forward. I'm actually going to do a big swing Asia trip in the fall, starting in, I think, mid to late September. So I think Korea is in the cards, and I look forward to seeing all of you as well. Somebody just reminded me, so CPRX listings. Okay, so this is a big one. We need your help. And I think you saw my post last week after Money Talks. So I think we should create a new hashtag. I don't know what it is, maybe CPRX Army, or you guys can come up with something better. But if you like CPRX Army, we need to make our voices heard with the exchanges. I've been speaking to Julian from Crypto Banking Alliance. We may be able to get him on Money Talks next week after our announcements. But we need to push these exchanges in a very respectful yet tenacious manner, that they need to list CPRX, right? And so that includes Coinbase and Binance and OKX and FTX, et cetera, et cetera. So maybe you want to come up with a hashtag like CPRX Army and politely push them at every opportunity to list CPRX. Now, having been on the receiving end of that with many of the coins that you all wanted us to list, I can tell you it is effective. Okay, I hate to admit it, but it does work. And so yeah. And somebody is asking, is CPRX a security? CPRX is not a security. It is a utility token. It was not issued by Abra. It was never pre-sold. It was created by the Crypto Banking Alliance in Switzerland. Abra was an initial grantee of CPRX for our Abra Perks rewards program, but there was never any public sale of CPRX to raise money by any entity, including the entity that created it. Okay, so hopefully that answers that question. So CPRX Army, please get out there and push our peers and friends at the other exchanges to start listing CPRX.
Bill, I do have the email for our audience. So that's perks-feedback, PRX, perks-feedback at abra.com.
PERX or PRX? PRX-feedback, because I'm going to put it in the chat at abra.com, right?
-feedback at abra.com. Yes, correct.
Okay, so this is for Abra Perks and CPRX feedback only. If you will not get support via this email, okay? Use the normal support channels for support, but we would love to hear your feedback on how to improve Abra Perks, what you would like to see with it, and feel free to reach out. We're looking at some of the feedback regarding using Reddit more and subreddits there to be more interactive with all of you. To be honest, we're really slammed right now trying to get these products out. But we do want this feedback. All right. By the way, somebody said CPRX everywhere is also a hashtag. That's good. Garrett group. That's totally fine with me. CPRX everywhere. CPRX Army. All good. You all figure it out, and I'll join you in that endeavor to get Abra Perks out there en masse. Okay, so somebody asking about relisting XRP in the US. So I'll address it to Doug. I think other people besides Doug were also asking, but Doug was the last person that I saw. Doug, I would love to relist XRP. In my opinion, it shouldn't have been delisted in the first place. I think one of our custodian partners delisted it because of the SEC case that's pending. I think this case is a joke, just given how it's been handled by the government side. It probably was a security offering 7 years ago, but they waited 7 years. Anyway, my opinion doesn't matter. It's all nonsense. The point is that I suspect it's going to be relisted at some point by our partners, and Abra will be able to bring it to you again. I hope that happens. Somebody was asking how many CPRX I have. So I have CPRX as a user, just like everyone else. I also bought CPRX on the open market. Myself and Abra employees get no special privileges as it relates to CPRX. We didn't get any special grants. If we wanted it, we either earned it just like all of you, or we bought it. And so I'm holding personally millions because I earned it by being a large Abra user, just like all of you. And I also bought a whole bunch more on top, and I'm gladly holding all of it in Abra Earn, earning an extra 3%. Yeah, a bunch of you were asking about video quality. I'm going to follow up with the team here. We have a great production team here, and we'll see what's going on. If we're actually, make sure, by the way, in YouTube, you choose the 1080p to make sure you're getting the best quality video, because if the charts are blurry, then it defeats the purpose of showing them. So we'll work on that. I promise you that, and we'll figure it out. It could also be my home internet connection, but I don't think so, because I'm in Silicon Valley, and the one thing we have is a lot of is bandwidth. I'm in the same town as Netflix headquarters, so I can't rely on that as an excuse. All right, so we're at time. Anything else? Any parting thoughts here, guys? You wanna bring up before we call it a weekend?
No, we're hard at work, you'll see super interesting stuff from us next week. So I'm very excited. So finally, I can get on my talks next time and talk about it freely. Yeah. We're very, very much hard at work, and a lot of exciting stuff to come.
Yep.
Cool.
Tanner?
Yeah, thanks to everybody. Anything that you all have questions about, need help with, feel free to reach out. We're always here 24/7, 365, here to help you out however you need.
Yep, totally agree. And you guys do an amazing job. I'll also say, we have we're pushing almost 200 employees now at Abra, and the product team once a month does a briefing for the whole company, and it was really exciting yesterday for everybody to get to see what's coming, and I got really amazing feedback on that, and so I'm just chomping at the bit to be able to share it with everyone. And the next few months, are going to be really something special and awesome for the Abra team and all the community that's been sticking with us. And I think with the market dynamics that are probably going to play out in the fall, it's going to be a very interesting few months for sure. All right. With that, guys, I'm going to say thank you and wish you an awesome weekend. And we'll probably, it may be a different time. It might be Saturday, but we will probably see you from Austin. I would say most likely see you from Austin with some super exciting news. So have a great weekend and we'll see you soon.